Hey guys, Jeremy Allen here with Fairway Mortgage. Wanted to chat with you today about some do's and don'ts when applying for a mortgage. First off, I guess we'll run through the do's. And first one would be you want to make sure you keep original documents such as pay stubs. You want to have your most recent pay stubs handy. You want to have bank statements, last two recent bank statements for all accounts that you're showing, and also most last 2 years worth of W-2s. Depending if you're self-employed or commission income, you're going to need the last 2 years worth of tax returns with all pages as well. So that would be number one. When putting down your earnest money, when you put the offer in, you typically have to put money down for a deposit. It's called the earnest money. You want to make sure that you're writing that check out of your own account. We could potentially talk about doing gift funds, but if that hasn't been talked about, you certainly want to make sure that comes out of your account. Thirdly, you want to provide all documentation from the sale of a current home. Like you need the sales contract if you're selling your current home before buying. And also you'll need like the Alta statement or CD from that sale showing that it completed. That's usually later on in the process, but just know that you will need that. You want to notify your loan officer if you're going to receive any gift funds, from a family member or a close friend. Make sure that they're aware that that's your intention. And the fifth do is notify your loan officer if your job changes, whether that be a change within the same job. You just want to let them know, but definitely if your job is switching, you want to have that conversation with your loan officer before you make that happen, because that could impact things for sure. And lastly, you want to just be aware that you might have to have a credit report pulled during the process. Just know that will happen. So, and typically that's, it's pulled up front at pre-approval, and then right before closing, oftentimes it's pulled as well. So just kind of know that going in. So let's maybe jump into some of the things that you don't want to do during the mortgage process. You don't want to open or close any asset accounts. You don't really want to be transferring funds between accounts. You want to minimize that as much as possible, unless you consult your loan officer. You don't really want to deposit any money outside of your normal payroll deposits during the process. It just leads to more documentation, and it's just harder on you as the buyer if you're moving money around and deposit money that isn't your normal payroll. The underwriter would have to have it explained as to what the reasoning is, and if it's minimal, not typically a big deal, but just a heads up, that's typically something that we don't want to see. And the third don't, you don't want to change jobs or employers without talking to your loan officer. You don't want to make any major purchases during the process. That new car, that new shiny Corvette can wait. Funny, I've had that happen. The furniture can wait. I know we're, as a buyer, you're excited. You want to start decorating and all that stuff, but you just want to wait till after closing. You don't want to have any issues during the process. And same with appliances. Just hold off on the appliances until you close. And you don't want to, I guess lastly, you don't want to open or increase your liabilities during the process, whether that be student loans, credit cards. You don't want to open up anything new during the process, because that, like I was talking about before, Oftentimes your credit is repulled, and that could, affect things. And we definitely don't want to see that happen. So anyway, just wanted to go through some of those. Hopefully that helps you. Please subscribe, and I'll see you in the next one.